All right, welcome everybody. Welcome to another simulation session. Today we're going to simulate gold here. We're going to simulate gold. We're going to go over simple situations as marking zones, the most recent zones, marking up where price may move after that. So let's see, is there a way to install which chart to use sim for GMT and Y close? So everything. So I'm just going to disable chat over here. Awesome. Perfect. So what we're going to go over today is just going to be simple situations where you can identify the most recent zones and then identifying where price may go after that zone. I've disabled the chat because it's very distracting because of the questions people ask. Questions are absolutely fine, but we're going to answer all questions without you even asking the question. So just chill out, relax. It's a weekend, and let's just have fun. Right. So first thing to do, we're going to bring our browser here and we're going to pick up a random date generator right here. We're going to pick up 10 dates. We're going to go back to 2020. We're going to go back to April. I think I'm going to open chat here right now. And we're going to go to 2021. We're going to go till March, I guess, March 30th. We want 10 dates. We only want Sundays. So let's see here. Let's see what we get. All right. All right, so we got the dates over here. Let's go again. Want a nice mix of numbers here. Mix of June, July, May, June, July. Oh, there we go. We got May, June, July, August, September, October, November. October and February. So let's go with June, 14th June. October, okay. Oh, we don't have October. We have September, 7th month. 7th month. All right, let's go with 26th July. There we go. 26th July. Let's close this browser here. New simulation. All right, so whoever has the simulation here, so this is the settings that I use. Obviously, it's going to be recorded, so you'll have to rewatch this to see the settings here. We're going to choose gold. Oh, had to sneeze over there. All right, so we're going to go towards 2020. We had, what was it? July, right? We had July. We had 19th July. I forget what it was, but I think it was July. Okay, USD. We're going to start with, let's start with 5,000. Actually, let's start with 3,000. 3,000. Oh, it was 26th July? Okay, 26th July. 3,000. So from here, I'm going to choose New York close, right? The question was asked here. New York close, lot size this. Leverage is going to be, let's do 1 to 100 leverage. Spread, real spread. Actually, let's go with the fixed spread of 2 pips, right? 2 pip spread. Previous history on chart is going to be around 200 days. Perfect. We got the dates, we got everything. Let's start the simulation here. So first, we will add our charts at this point. We're going to start with the weekly. Oh, loading pretty slow here. We're going to start with the daily, and then we're going to go all the way to the 4-hour, and then the 1-hour, and then the 30-minute. I remember the last time we did this simulation was when I was in quarantine, and the government of Canada kept calling me to ask me, are you quarantining, sir? Sir, are you in quarantine? Okay. Got the 5-minute. Now we're going to open it right here. And what we're going to do is, so the suggestion was to remove these indicators and save this as save template as offline. All right. Saved it as offline. This is the week 5-minute. We're going to open the 15-minute. Oh, nice. Amazing. Beautiful. Made my life so much easier now. There we go. 4-hour, daily, weekly. Oh, holy. We're coming up towards 1901 at this point. Okay, awesome. So, again, all questions. Actually, I'm going to leave the chat open. Whatever. So, looking at the daily, looking at the 4-hour, looking at the 1-hour, we're here, right over here, looking at 30 minutes. So for people who haven't used simulation here, what I'm going to do is I'm going to put the name right over here, right? It's going to be simulator used soft for FX. This is simulator being used at the bottom right here. And let's go towards, so whenever you see time right here, it says 100 hours. This is at 6 p.m. Eastern, right? You got to remember this, 6 p.m. Eastern. So what we're going to do is we're going to simulate from pre-New York, going all the way into New York Open, going all the way into NYSE Open, and then moving all the way into like, London close, and there we're going to stop, right? So we're going to simulate 5 days like this, one whole week, and we're going to see where we can take our $3,000 to. On Friday, if we're up by a bit of a percentage, then we might do like a risky trade to see, like, just for fun. So let's forward this up towards the time that we normally come to the chart. So the whole point of doing simulations is to really understand that, okay, are you really trading the time you're simulating? Like, let's say, for example, in the morning time, I only trade in the morning, so that's what I'm going to simulate right here. So this is London Open, 1000 hours. 1000 hours London Open, 4 a.m., 5 a.m., 6 a.m. So here we are at 6 a.m. Eastern right now. So this is like, for example, you're coming through the charts and now you're looking at the charts to see where we can go. So what we do all the time is we go to the higher time frame and we see that the higher time frame is really bullish over here. So we're like, okay, well, I guess we have bullish momentum. So this is a question I get sometimes that, hey man, like when price is bullish, I mean, where do you buy, right? So that's something we're going to try to answer right here because I guess price is bullish at this point. So let's take a look on the daily time frame. Daily is also pretty bullish, pretty sad. We can't take a look to the left-hand side, but it is what it is. So looking on the 4 hour is also very bullish. So what we're going to do is we're going to do this scale fix thing here. And what we're going to see is that we might come up to fill this wick, which is 30 pips away, right? There's a very high probability. So what we need here is we need our line studies right here. Okay, perfect. So this is possibly the wick we're trying to fill on gold right here, which is 30 pips away. So now we got to understand that do we really see this on the smaller time frames or not, right? So let's go towards the 1 hour time frame. Looking at the 1 hour time frame, we have price moving up. We have bullish candles, just like right over here. We have a bullish candle forming right here. So now the question is the next candle, will it wick down to continue moving up or not? So now if you remember what we learned on the 25th April or the 20, whatever the date was, right? On that webinar where we learned that when you have a candle closing with little to no wick on the top, then there's a very high probability that if the next candle retraces and breaks the high, there's a very high chance it can continue moving up. If you guys remember that. So I think that's something we may be looking at right over here. So we're trying to fill this wick. We have a lot of bullish momentum. We're in the time frame when there's volume at this time, which is pre-New York. Looking at the 30-minute time frame right here. Let's take a look on the 30-minute. Yeah, this looks pretty good too for price to continue moving bullish. So what we're going to do is we will wait for price to kind of like retrace, create a lower wick, and then potentially continue up to fill this wick to the left-hand side because there's no sells. You have to look at this and ask yourself, okay, can price fall down? Like, what's the probability that price is going to fall down rather than moving up? Right? And there's going to be overwhelming probability that, okay, there's a very high chance price will continue moving bullish. So what we need at this point is to know how far can we retrace. Okay, yeah, perfect. So we're only going to focus on the 30-minute. We're going to wait for price to retrace, and then we're going to try to see if we can enter a position at this time for price to continue moving bullish. That's what we're going to try to do. Perfect. Let's wait. Because at first, we have a small wick over here. Even if you take a buy at this point, our stop is going to be massive, right? So we want price to maybe wick down first. As it wicks down, and then if it starts to break the high of the previous candle, that's where we want to take a buy for price to potentially continue moving bullish. Right? You can see within the first 2 minutes, it's moving bullish. That's totally fine. There's no problem, because we want to see what we want to see. So we want price to kind of like retrace first. So that's something we're going to wait for. See this? We're in 4 minutes right now, and slowly seems like price is about to retrace at this point. Nice. So here's the kind of structure that we're looking at, right? So it's very important to visualize. So let's say you have a candle closing like this with no wick on the top, a bullish candle, right? So the visualization is that you're expecting the next candle to make a lower wick first and then break the high, because if it breaks the high later on, then there's a higher probability it's going to continue moving bullish. Because at this time, if you enter a trade at this time right here, we don't know how far it's going to retrace. We have no idea because it hasn't retraced that much yet. So we got to wait. We got to wait for the candle to print something we want to see, and then we can execute on that. So let's see how far it comes down, because the more it comes down, the better it is, because wherever we're going to take our entry, our stop is going to be below that wick. So that's something we're basically anticipating at this point. You can also look at the time we're in right now. Oh, wow, look at that. Nice retracement here. Beautiful. This is exactly what we want to see. If we're going to continue moving bullish, we need to respect these lows right over here. Because if this candle breaks the previous low, then there's no more buys. It sells. Because, I think better sells are below this area, but we need to respect these lows for price to continue moving up to fill this wick. It's a nice range here too, 26 pip range. So we're going to risk around 2% per trade here today. And yeah, let's see. The 15-minute candle is also about to close. Okay, we're coming up right now. As soon as this candle breaks the high of the previous candle, we're going to look for an entry at that point. But if it stays bearish, possible to use fixed loss instead of risk percentage. Actually, you know what? Okay, let's use fixed lots. Let's use fixed lots. So fixed lots is going to be, let's use 0.5. Yeah, 0.5. Okay, so we're coming up right now. We're about to break the high of the previous candle. There we go. We've broken the high of the previous candle, right? We're only looking at the 30-minute at this point visually, right? So now let's take a look on the 15-minute. 15-minute is also moving up, but we have this sort of like a rejection here. So 15-minute is a weak confirmation time frame, right? Overall, 1 hour time frame looks good for price to continue moving bullish. 30-minute time frame looks good for price to continue moving bullish to fill this wick. We have a high volume time at this point. 4-hour time frame looks good to fill this wick as well. The only time frame that does not look good is the 15-minute time frame. And we know 15-minute is the weak confirmation time frame. We're also creating a support. So based on that, I think it's going to be a good entry right over here, right? Take a buy. Stop is going to be below the previous. Oh, no. TP is up over here. Stop is going to be below the previous candle right here. Close partial. It's only possible to use the magic. I don't find it. Yeah, you need to Google that. It's very easy. All right. Probably going to remove our take profit. And yeah, that's it. We broke the high of the previous candle, and now we're expecting it to continue moving bullish. Yeah, I don't mean to be rude, but you can basically Google how to close partial positions. The first link is going to be your answer right there. All right, let's take a look at the trade right here. So we're up about 12 pips, 13, 14, 15 pips right here. So what we're going to do is probably going to close partials at this point. 50%, actually 90% right here. We're going to close 90% and put stops at break even, and that's it. We're going to let it run. So this trade idea was based on previous candle closing with little to no wick. So we waited for price to come down and then continue moving up. Awesome. So now ideally we want the price to fill the wick at this point. And as we continue up to this wick area, we're going to close another 50% and then, 90%. And then we're going to say, okay, it's done. Spread is 20 pips. No, spread is 2 pips. This is gold, so it's a 2 pip spread. The 30-minute candle is also about to close, and I think the position is going to get stopped out. Ooh, position got stopped out. Okay, disable chat. All right. Okay, so position got stopped out. Let's take a look on the 1 hour time frame. 1 hour still here, and 30-minute candle is closing a weak bullish candle, which means the volume moving up is a little dying at this point, right? So there's no trade at this point now. We took one trade, we thought about it, we had a stop right down over here. Our TP was somewhere up over here. We secured positions at around, like 14, 15 pips, 2%, and basically that was one trade over here. So now what we're going to do is we're just going to wait to see how this candle closes, and I guess that's it. Right? Let's speed it up here a little bit. Now we're waiting for the 1 hour candle to close. If this 30-minute candle breaks the previous low, then probably it's going to be pretty hard for price to continue moving, So, yeah. Candle's about to close in 15 minutes. Let's take a look at the 15-minute time frame. 15 minutes is just ranging here. Just difficult range. Let's take a look at news. We don't have any news here coming on. We have some Fed announcements later on, but that's about it. 5 minutes left, 4 minutes left, and 3, 2, 3, 2. Oh, wow, look at that. We broke above the high. All right, perfect. Perfect. Look at this 1 hour candle. 1 hour candle closed with little to no wick on the top as well. Seems like we can keep moving bullish, but stop is going to be way too big. So probably going to wait to see if we create support, right? Because look, right now, if someone's looking for buys at this point, you got to ask yourself that, is this the right point to buy? Because if you look on the 30-minute candle, we only have bullish candle, bullish, 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 bullish. But on the 1 hour time frame, we still have bullish candles, right? So the more price moves away from a zone, the higher the probability that it's going to come down to create support and then continue moving bullish. So I think this was one trade here for this day today, and now we're going to move on to the next day here now. So let's move on by one candle, 1 hour candle. Oh wow, we came back down over here. Let's take a look on the 1 hour time frame. We still came down on the 1 hour time frame. So this is our support right over here on the 1 hour. This is 10 a.m., 11 a.m. Oh, we're just ranging at this point. Okay, perfect. Right. Let's move on to the next day at this point. So we're going to pause this and move on to the next day. Oh, we basically ranged here on gold. So we had one trade moving up, broke that trade down, and that was about it. We followed the trend, traded the trend, took profits, and that's about it. So let's move on to the next one here now. Oh, wow, look at that. Moving bullish at this point. Okay. Let's see here. Let's move on to the next one. Oh, wow. Look at that. Still moving up in Asian session. Oh, came straight down. All right, let's move on to London. This is London Open, 3 a.m., 4, 5, 6. 6 a.m. Eastern. So this is when you come to the charts and you see price moving. You're like, holy, we went bullish. Came down, we retraced, and then we closed right at this point at 1931.59. Right, so let's take a look on the weekly time frame. Weekly is basically rejecting an area at this point. If you look on the daily time frame, daily is also rejecting an area at this point, right? If you look on the 4 hour time frame, 4 hour basically, here's what it did, right? So 4 hour created a support around 1931, right? We have a support formed. 4 hour candle closed with the wick at support, and the next 4 hour candle is now below this support. So now the question is, will this continue down to fill this wick, or does this wick mean a rejection for price to continue back above the range at 1931? That's the question, right? So to answer that question, we need to take a look on the smaller time frames now. So if we look on the 1 hour time frame, what we can identify is that the 1 hour candle closed below support, this bullish candle. Next 1 hour candle closed bearish, but it's also closed below support at this point. So now we got to look to see that, okay, what's the probability that the next 1 hour candle will continue moving bearish? So for that, we need to look on the 30-minute time frame. Looking at the 30-minute, it seems like we are closing below support. 30-minute candle is closing bearish right over here. So I think a pretty good idea is going to be that, okay, if the next 30-minute candle can break the low of the previous one, I think there's a very high possibility we can continue moving bearish at this point, right? If we break that low right over there. But if we don't break that low, if we respect that low, then I think there's a very high possibility that we can continue moving back up, right? Makes sense? I guess that makes sense. So this is the 1 hour time frame right now. So we gotta wait to see whether we will, like, kind of like break that low or not. Because I think if we break the low right here, this is going to be a very good opportunity for price to take a sell. And then we'll see where price can go after that. Perfect. So let's take a look here. Because first, I think we need for price to make a top wick and then continue moving down. That's going to be the ideal scenario here today. Just like we did in the previous trade. Okay, yeah, look at that, right? We're making that top wick. If we start breaking the low, now from what I've seen is that whether we make a top wick in the first 2 minutes, 2 seconds, that top wick has to be made. Because like once that top wick is made, that gives us some sort of confirmation that, okay, now there's a possibility for price to continue dropping. And that's what we're gonna look for here right now. See, we're making that top wick, beautiful. Why does the price need to make a top wick? Is it to grab liquidity? Yes, it's to grab liquidity. So it's grabbing liquidity because look, if you look at the previous candle has a top wick and it has a bottom wick. If price just continues falling down without making a top wick and you take a sell at that point, we don't know if it's going to continue up to make a top wick or not, but like if price continues dropping without making a top wick and never comes back, then, that's a missed trade. Then you basically missed the trade, and that's totally fine. That happens to me all the time. But it's very important to execute on something that has a solid outcome of working out. So we can see right here, ironically, we're moving up here now, but if we start breaking the low at this point, that's going to be better to take a sell. So we're going to wait at this point now. Oh wow, we're just moving up at this point. So the 15-minute candle is about to close. We're going to wait for the 15-minute to close. We haven't looked at the 15-minute yet. We haven't looked at the 1 hour yet. We're only looking at the 30-minute right now. So the 15-minute candle has closed. Let's take a look on the 15-minute time frame. We can see that, okay, let's just scale fix this here. So if you look on the 15-minute, this is what's happening on the 15-minute. We're creating the support. We're creating this resistance right here, and we're basically waiting for it to continue to break the low so we can continue bearish. And we have all this range to fill right over here. All this range right here. Pretty good range, right? 40, 50, 60 pips at this point. So perfect. Let's just wait to see. Oh, there we go. We're coming down at this point. The next 15-minute candle. Let's slow it down a little bit so we can get in a entry. Oh, delicate situation. Very delicate situation. We need to wait for that low to be broken. Let's take a look on the 5-minute here for a little bit. Oh yeah, look at that. 5-minute is also trying to come down, right? We have a support formed on the 5-minute, and this 5-minute is about to close here as well, right over here. So we're only gonna looking at the 30-minute right here for it to break the low so we can take a sell, and then we're gonna decide where our stop is gonna be. So perfect. Let's see this. We're coming down, we're not coming down, what's going on? Yeah, this is a money setup. This is what I call the money setup. We break the low and we come down because look, technically it looks perfect. Support, broke support, retest. Now we need a confirmation that we're going to break down. That's all what we're looking for. We need a confirmation that we're breaking down. So 30-minute candle is about to close in 20. Oh, we're at 24 minutes right over here. It's going to be a blessing if this candle closes a small bullish candle and the next candle breaks the low. That's going to be the perfect move for price to continue bearish. We have about 3 minutes left and 2 minutes left. Yeah, so we're waiting at this point. This candle does not want to break the low. 9 minutes. Oh, a minute left. Oh, wow, look at this. Look at this weak bullish candle. Let's take a look on the 15-minute time. 15-minute candle is also closing bearish. This is beautiful. If we break the low at this point, we are going down. 100%. Look at this. We're making a top wick. We need to break the low now on this candle. See, so we waited one full 30-minute candle to break the low, but we did not break the low, right? Now this is the new 30-minute candle. And if you look on the 1 hour time frame, 1 hour time frame is right here. We haven't really broken the low. We look on the 4 hour time frame. 4 hour time frame is still bearish at this point. So we're just waiting at this point right now, right? We're looking at the 30-minute and we're going to see if we're going to continue moving down here. Oh, there we go. We're coming down slowly. Come on. Move a little bit. Get a move on gold. Because this is also a high volume time right now. This is a pre-New York when there's high volume, but it's just not there. We need that confirmation. Oh wow, it looks like we might break the low in the last few minutes here. We're slowly coming down. They don't want us to get in these cells. Yeah, they don't want us to get in these cells. I think the institutions are watching us right now. Oh, we broke the low right there. Yeah, I think this is where I would have entered right here. We're about to break the low at this point. Right there, right? So we're going to enter a sell. This is going to be sell position. Stop is going to be above this current candle. Take profit, we're going to take away right here. We're going to go towards the trades. We're going to take away our take profit. And yeah, so the stop is above the current candle. We're breaking the low. We're anticipating price to continue down. And basically, that's it. We're going to secure positions and put stops at. Can we execute on the 5-minute? We're not looking at the 5-minute. Yeah, I mean, like I'm only looking at what I'm looking at right here. You know, so based on the stop losses here as well. So perfect. We're in it. Let's take a look on the 15-minute time frame. 15-minute is also kind of like wicking here and there. 30-minute is retracing. Oh, there we go. We're coming down. Candle's about to close. We're moving at 6 pips, 2 pips, 3 pips. Does not want to drop here. I guess here we may be able to manage our risk. Oh, there we go. 13 pips right here. Oh, 20 pips. Nice move at this point. So we're going to close partials right here. Close around 90%. When you use visual mode, set the TP, check, and you won't have to set one. Oh. There we go. We're going to close 90% right here. And we're going to leave the rest running with stops at break even. That's it. Maybe speed it up here a little bit, and let's take a look on the 1 hour time frame. 1 hour time frame broke the low here as well. 30-minute candle broke the low here as well. Very nice. Oh wow, 40 pip move at this point. What a nice move. So we're probably going to close another 50% right here and leave the rest running. Awesome. 2 trades up 7% at this point. Probably gonna get stopped out here, but you know, whatever. Oh, we got stopped out. Pretty good at this point, right? Now, when we look at the 15-minute really tapped into this area 1922, almost tapped into 1922 even, but then it rejected it, right? And now, if this 15-minute kind of closes back in the range, then basically this move down could be very well a fake out, you know, and if this move is a fake out, then we may break to the top side to continue moving bullish. And I really want to wait and see whether this is a fake out for price to continue moving bullish or not, right? So let's focus on the 30-minute to see how this next 30-minute candle closes, because this is a big wick down over here. And looking on the 15-minute, we just need some confirmation for price to kind of like, if we think, okay, here's the thing. If we think that this wick is going to get filled, what we got to do is we got to look at the 15-minute, and what we want to see here, we want to see the 15-minute candle close like this. If we get a 15-minute candle closing something like this, then we can say, okay, like, you know what, there's a high probability for the next candle to continue moving bearish. Fake out liquidity grab is the same. Yes, it's the same. I think with practice, you're going to learn more about fake outs, but they're kind of different, you know. So this is what's happening right now. We have a zone at this point on the 30-minute. And if we break above this area, there's a very high probability we can continue up towards 1939, right? And that's the only thing that I'm going to look for here. Not going to execute on it, but just going to anticipate it happen, because it's always good to anticipate things, right? So this candle is about to close, and we're going to see how this candle closes, and we'll go from there. 30-minute candle closed above. Now you can see, look at this. This 30-minute candle is breaking the high right here. This is not the right time to take an entry. We want this candle to create a lower wick first, and then we want it to break the previous candle's high. Just like we did in this previous example, and we did in the first example we did, right? So you need to wait for candle to come down, make a lower wick, and then continue to break the high. And then you could say, okay, like, you know what? With utmost certainty, now we're breaking the high. So I think this is the right time to enter an impulse entry, right? Because if it moves like this in the first 2-3 minutes, there's a very high probability it's going to continue down, you know, so we can't discount that fact. Oh, wow. Yeah. See, look at that candle. It came straight down. So this is NY open at this point. Let's look at the 1 hour candle. 1 hour candle is breaking the lower right here in the first few seconds. Not a good entry at this point for sells at all, because remember, we needed to make a top wick and then break down. Can we say the previous 30-minute candle broke resistance? Yep, it broke resistance, but the steps I discussed, it basically led for it to not to go up. So now you see this 30-minute candle, current one, it made a lower wick, and if it starts breaking the high right here, then there's a high probability it's going to continue moving bullish. You know, so first you need the candle to make a lower wick and then continue up. But like sometimes it will not make a lower wick and it's going to continue moving. And at that point you can just say, okay, you know what? It is what it is. I missed the trade, you know, and if you missed the trade, that's perfectly fine. I miss trades like that all the time, you know. I'd rather miss a trade than to be in a hoping to win the trade, you know, or hoping to not lose the trade. So let's see how this candle closes. So we're going to forward this candle here. Oh, wow, look at that. It went straight up. See, it's the same idea. Candle formed, made a lower wick, broke the high. Your entry goes right there, and then obviously we start to move bullish. You know, so we're up almost like, you know, 6.8% for this simulation so far. So this same idea, it works all the time. It works on high volatile pairs, you know, like gold, pound yen, pound AUD. And at the same time, you got to look at it this way. Has the candle formed the way it should be formed, right? When you have a candle, this is what a perfect candle looks like. A perfect candle has a body, it has a top wick, and it has a bottom wick. So it has to be cosmetically appealing to you before you take the trade. You know, so this is why, like, you know, I've been focusing on not entering the trades as we break the highs or the lows in the first 2 or 3 minutes. Always wait for price to make a lower wick or make a higher wick and then go the direction where you intend it to go. So let's take a look on the 4 hour. 4 hour also rejected that area and came right back in the range. Perfect. Let's move on to the next session here. Let's see what happens here for the next hour. Oh, we can, oh wow, continue moving up here. Okay. All right, let's move on to the next day. Forward these candles. We're moving into Asian session right now. Ranging in the Asian session, no volume. You can see candles are printing side by side. Delicate situation. Moving into London Open right now. This is London Open. 3 a.m., 4 a.m., 5 a.m., 6 a.m. 6 a.m. Eastern, we are back again. So let's take a look on the weekly time frame. Weekly is now moved bullish over here. Okay. Looking at the daily, daily is now trying to move up here as well, right? So if you look at the previous daily candle, so whenever we're looking at the charts, we need to look at what the previous candles are saying. The previous daily candle is saying that it made a liquidity grab or an exhaustion wick, and now it made a move to the top side, you know, and now slowly this daily candle may continue up to fill this wick on the top, right? So we're going to take a look on the 4 hour time frame at this point. So looking on the 4 hour, it does seem like we're creating some sort of a support right here, and this 4 hour candle is creating a lower wick right here, right? Now if this 4 hour candle breaks the high of the previous 4 hour candle, I think there's a very high probability that we can continue moving bullish to probably, like, you know, into like 1969, 1970, those areas right there. So we're going to apply the same logic we applied on the 30-minute and the 1 hour. We're going to apply it on the 4 hour right here. It's my birthday, taking off early. Oh, happy birthday, Mitch. Hope you have a good one. Have a great weekend and enjoy it with your family. And nice, awesome. right? So we're going to apply the same technical analysis on the 4 hour, just like we did on the 30-minute and the 1 hour. So we're going to see if we do break the high or not. So what we're going to do is we're going to pull a line right over here to indicate that this is the high on the 4 hour time frame. Let's move on to the smaller time frames now. So the 1 hour time frame is basically ranging at this point. We have a resistance formed right here, and we need this high to be broken for price to continue moving bullish. So let's take a look on the 30-minute time frame. 30-minute is also ranging. Yeah, we're in a range right now, so we can't really do anything at this point. So we gotta wait. We have to wait. So our initial bias is based on the 4 hour. If we break above the previous candle's high, there's high probability we're going to continue moving up. And we shall consult the smaller time frames to give us that opportunity that we can continue moving up or not. Now, that's somewhat to take say for buys, right? Let's take a look at how can we go down. Can we do sells? So if you take a sell right here below this previous candle, this is like a 40, oh, it's like a 45, 46 pip range. It's actually pretty good. Let's take a look on the 30-minute time frame. It's pretty choppy, so I would say maybe wait for price to break below this support for price to potentially continue down, because it's very messy at this point right here. And I'm stuck at the quarantine in Sydney. Oh, I feel bad for you. All right. Let's see what's going on over here. We're ranging. Are we going to break up? Are we going to break down? Or are we just going to stay in this range at this point? Let's see if we have any news over here. We have no news. We have pending home sales later on, FOMC. Oh, we have interest rates. All right. Looks like we're going to trade interest rates here in the simulation today. Beautiful. Interest rates are today. So if we have interest rates, there could be a very high possibility that price may just start ranging. What if the break of the low of the previous bullish 30-minute candle? Yeah, but I mean, it's only like 22 pips away, and there's a lot of like wicking happening right here. So it's better to wait for the interest rates, right? Because when I trade and when I see there's a high volatile news event, I just sit out for that day. I just wait for that news event, and then I just try to just see what we can get from there. Yeah, because we look on the 1 hour time frame, we're in a range, right? Look, we're in a range. That's it. We're in a range. So no matter how much you can convince yourself that you can trade in this range, it's not going to be a good outcome. Even though this range is what? This range is like a 90 pip range, 94 pip range. It's still pretty choppy. Like if you look on the 15-minute time frame, it's really, really choppy here. Let's forward this by 30-minute candle. Yeah, see, it's very choppy at this point. Still choppiness. It's better to just wait for this range to break. Let's move on by another 30 minutes. See, we're still in the range here. 30-minute time frame, still ranging. Next bar, still ranging here. Next one, moving up. Okay, whatever. Right? 4-hour time frame, we're starting to move up over here. Looking at the 1-hour time frame, we're starting to break the high. But look, we're starting to break the high, but we haven't really made a lower wick first. We need the price to make a lower wick and then continue moving bullish. That's what we need to see. Right? But at this point, I mean, we're just ranging over here. Let's move on to the next 30 minutes. Oh, we're rejecting that area on the 30-minute time frame. Let's move on to the next one. See, we didn't break the high, but we came straight down. So where are you going to trade? It's going to get extremely difficult. Maybe this move right here, but it's still in the range. You got to be very, very careful. Let's move on to the FOMC. And let's see if we can do some buy stops and sell stops. So this is at what? 2100 hours. So we're going to move on to 2100 hours here. Oh, wow. Came straight down, moved back in the range. Okay, there we go. 5-minute time frame. All right. 56. 57. So we're going to try to trade the way we traded NFP here. Okay, perfect. So looking at the 30-minute time frame, what we're going to do is maybe put a buy stop above the 30-minute, which is going to be around 24 pips away. Pending orders, distance is going to be, buy stop. This is stop loss. So we're gonna have the buy stop right here, and we're not gonna have a stop loss, obviously. We're not gonna have a take profit, obviously. And then we're gonna have a sell stop. Sell stop is gonna be below this candle, and that's it, right? This is exactly what we did for NFP, and this is exactly what we're gonna do for FOMC over here. So let's bring our trade condition and let's see. Let's see what get activated here. Oh, didn't really get the kind of push we were hoping for. Our buys got activated. Probably gonna close this right here because didn't want like a retracement, and yeah, I don't think that was a smart thing to do. Oh, wow. Yeah, that was not a smart thing to do. Because if you have buy stops and if you have sell stops, you're really expecting price to just continue pushing through that zone. Even if it retraces a little bit, you just got to be like very, very cautious. You're like, it's retracing. All right, I'm going to get out. Just get out ASAP. That's what I've seen from trading news and high volatile news events. So it is what it is. Now we're going to move on to the next day over here now. Let's move on to Thursday. Let's go. Oh, wow. Look at that. Damn, we moved up, came down, rejection, and moved right back up. Crazy. Let's see how this affects Asian session here. We're moving into Asian session, kind of ranging over here. Yeah, crazy. Let's move on back to our. So this is London Open, 3 a.m., 4, 5, 6. 6 a.m. Eastern, and price is back in the range over here. Let's take a look on the weekly. Weekly kind of moved up a little bit and then moved back down. Okay, it is what it is. Let's take a look on the daily time frame. Daily is moving up here as well. Let's remove all these zones here from the daily time frame. And yeah, we don't know whether this will continue moving bullish or will it continue moving down. So let's take a look on the 4-hour time frame. So looking on the 4-hour, we're at the support where we rejected here previously. And I think we are respecting the support because the 4-hour candle seems like it moved down and now it's moving right back up. So we need to figure out whether price will continue moving back up above the support, or are we going to kind of like retrace to continue down? That's what we need to look at from the smaller time frames. So looking on the 1-hour time frame, we kind of see that we're coming back in the zone at this point. Yeah, it's very tricky at this point right here. Extremely tricky. Let's take a look on the 30-minute. 30 minutes also ranging here. So let's remove this blue line. And let's draw our supports on the 30-minute time frame. So this is our support right here on the 30-minute, our most recent support. And this is our most recent resistance right here. So all we're looking at, we're not looking at this support to the left-hand side. We're not looking at this area here to the left-hand side. Because if we're creating a support right here, we're only waiting for price to kind of like, break below this low for price to continue down to fill this wick. That's it. Or if we can kind of like break above this resistance, then there's some probability we may continue up in this 30, 35, 36 pip range to fill this wick and to potentially continue up towards 1960. You can see the price here from the left-hand side. So, so we're going to see if we break the low right here at 1951, or do we break the high at 1956 to continue moving up? And yeah, I guess that's all we're going to wait for here now. Kind of like a tough position it's in. Pretty tough. Let's take a look on the 1-hour time frame. 1-hour time frame is also the way it is right now. We just don't know whether it's trying to move up or it's trying to move down. It's kind of like, stuck in the middle right over here. All right. Our first instinct is to see whether we break below this area to continue down or not, because if we break below this area, I think we can fill this wick here through the left-hand side. 100%. This is like a 61, 50 pip wicks. It looks messy. Would you take a day off when pride behaves like this? Yes. But going bearish, we have clean traffic because we have this wick to fill right here. Going bearish, right? only going bearish. If we get that opportunity, I think we can take that trade. But if we don't, and I mean, looking for buys are a little messy, but sells are not messy at all. We have this wick to fill, and if you break down with the volume time, and there's going to be momentum in the market, wicks will get filled. So that's what we're anticipating here. This first 30-minute candle is about to close, and we're going to see how this candle is going to close at this point. We have 5 simulation minutes left. Oh wow, we're rejecting that area. Okay. 30-minute candle has closed bearish. Yeah, we're still ranging at this point. Let's copy these zones over to the 1 hour time frame. Right here. Oh, looks like we're trying to break down now. Okay. Perfect. So if you look on the 1 hour time frame, 1 hour time frame looks pretty messy here, but on the 30-minute, we can see some sort of a structure, right? And the structure is the support that we're respecting at 1951. And we still haven't broken that. See, now price is ranging. This is going to be a really good example on how to look for a trade when price is ranging, right? So yeah, that's what we're going to wait for right here. So if you look on the 1 hour time frame, it does look pretty nice. If the next candle breaks the low right over here, I think we can continue moving bearish, right, to fill this wick. That's going to be a very, very nice trade. Or if we can break the high, I think we can continue moving bullish. But we need to kind of like, close above, and let's take a look on the 30-minute. Yeah, see the 30-minute? We have to close above this area because we can't take an impulse entry because it hasn't made a low at this point. But if price continues moving bullish, then we basically miss the trade at that point. Because you consider the shadow, I don't know what the shadow. I'm only talking about what I'm seeing right here. Right now, price is just ranging, so we're just waiting for price to either break above or close below. I'm not worried about what's happening in the range. I'm not worried about how the candles are closing in the range. That doesn't matter at all, right? So now when we look at the 1 hour time frame, look at this. Look at this right here. Doesn't this look nice? That now we ranged in London session, right? And then we ranged in pre-New York. Now we're in New York Open, right? Don't we think that in New York Open, we're going to have a lot of volume? And with that volume coming in, if we break below the low of this 1 hour candle, wouldn't price continue moving down? Something that we learned in the webinar we did like a week ago, or like, before that week. With impulse entries, if we break this low right here, there's a high probability we're going to continue moving bearish because we're at New York Open and there's volume at this time. So I think that's going to be a pretty good idea to execute on for price to continue moving bearish. So I think if we can break that low, oh, we're moving up over here. Your 20K trade days ago on gold was impulse entry, but the candle has no lower wick to confidence to execute it. Yes. So we're waiting for price to kind of like break this low right here. Oh, slowly we're breaking the low right here. So this is where we're going to take this sell. We're breaking the low of the previous bullish candle, which is weak. Let's take a look on the 30-minute. 30-minute is still in the range. Looking on the 4 hour, 4 hour still whatever. Looking in the 15-minute, we're breaking below this low. So this is only being executed based on the 1 hour time frame, right? 1 hour time frame, because 1 hour time frame is a stronger time frame than the 30-minute, than the 15-minute. So this is slowly being executed on the 1 hour time frame. So what's the stop here going to be like? 30, 29 pip stop loss. Looking at the 30-minute. 30-minute, if we take it, 30 pip stop. You know what we're going to do? We're going to lower our risk at this point because the stop is a little bigger. So we're going to lower the risk 0.25. And this is going to be a sell. So stop is going to be above this area right here. And yeah, that's it. And the idea is for price to continue breaking the low, to continue moving bearish. Oh, nice. 14, 15, 14, 15. So now when we look on the Oh wow, this is really struggling over here. 30-minute candle is about to close. Oh, are we going to get stopped out? Let's take a look on the 15-minute here. 15-minute candle. Oh wow, it hasn't really broken the half of the previous 15-minute candle. This is a mess at this time. Gold is in trouble. Now that I'm thinking, this is why we used like a lower risk at this time. If your stop loss is this big, then do we wait for 1-to-1 or just secure at 10 pips? That's all up to you. That's all up to you how you want to manage that. But what I'm looking at this is now we have the candle closing a weak doji candle. Weak doji candle means that nothing happened at this time. Looking at the 1 hour still good. We broke the low. There's high volume at this time, so we're still anticipating price to continue down. If this was my normal risk, I would have closed 50%. But even though this is a smaller risk at this time, so we're still keeping this open because there's volume and really anticipating price to continue bearish here. I mean, we haven't really gone to 1-to-1 at this point. Really want price to go to 1-to-1 to secure positions at 22, 23, almost at like 28. We're still in the first 5 minutes of this 30-minute candle. This is like a wild bull right now, going up and down, not really managing what's happening at this point, other than the fact that we have this wick to fill and there's high volume at this time right here. Probably this is going to be the time. This is where now I'm going to close almost like, almost all the position right here, 90%. This was a difficult trade, I'm not going to lie. This was extremely difficult right here because the way price was moving up and down, we just weren't sure whether we will continue back in the range or will we continue breaking. Oh, wow. We're breaking down over here. We broke another 20, 30 pips. Oh, wow. Filled the whole wick. Let's take a look on the 4-hour time frame. 4-hour time frame also went bearish at this point. Yeah, this was very, very difficult. This was only taken based on the 1 hour. We broke the low. And when we look on the 30-minute candles look really, really, really messy. 15-minute candles also looked really, really, really messy, right? So we only took this based on the 1 hour time frame because the visuals on the 1 hour, they looked perfect for price to continue down. But the overall momentum was down. We also had to fill the wick, and now look what's happened. Now we're closing back in the range over here. So the good thing, those positions were actually secured, because now who knows what's going to happen. Let's take a look at the news. We have no news here later on as well. Nothing. A very difficult trade, executed on the 1 hour and made it work. And look where price is at right now. We're moving back up at this point. Oh wow, moved right through the zone. I'm not sure what's happening on gold at this point. What was happening on this day? This is just really waking up and down at this point. Okay, whatever, perfect. We're up about 7.3%. Only been using, 0.5 lots in first 2 trades and used like a 0.25 in this last trade. Let's take a look on the next New York session here. Oh wow, came straight down. Let's take a look on the daily. Daily is also bearish at this point. 4-hour time frame is also pretty messy, right? So we're going to remove all these areas now. All right, let's move on to the next New York session. This is a 1-hour time frame. Okay, we're moving up to Asian session. Asian session has volume now. Look at this. We're moving up over here. Nice. Asian session is just pumping. We're moving into London Open right now. This is London Open. We're at 1976 London Open. 3 a.m., 4, 5, 6. 6 a.m. Eastern. Crazy. Look at this. Crazy. 76 pip move on gold. This is where gold was just spitting out pips, back in the day. Back last year when Trump was in. All right, let's take a look on the weekly. Weekly has moved up a lot. Weekly has actually moved around 800 pips over here. Let's take a look on the daily time frame. This daily candle is bullish, right? So when you see this daily candle, it's breaking above the previous bearish candle. This means I think there's a very high probability for the daily candle to continue moving bullish over here. I mean, we're really bullish. Daily candle kind of like ranged, and now it's trying to move further up over here. So let's take a look on the 4-hour time frame. 4-hour time frame, what we did is we kind of like, broke above this resistance, and I think now we are retracing right here, right? If we're retracing and if we break above its own high, I think there's a very high probability we can continue up to fill this 4-hour wick. That's something which is very, very clear at this point, right? So if we measure this range right here, this is like a 72 pip wick over here, right? So all we need to see is we need to see some sort of a support being formed on the 1 hour time frame or in the 30-minute time frame to give us that confirmation that, okay, now we've created a support for price to continue moving up to fill that wick. So let's take a look on the 1 hour time frame. So 1 hour is basically creating a resistance, right? And now we have some sort of a support formed at this point, which we need to take a look on the 30-minute time frame and see what's going on. So on the 30-minute, oh yeah, there we go. We got a support formed right over here on the 30-minute time frame. Beautiful. So all we need to do is to wait to see whether price will break above this high or not, because if we can break above this high, then I think there's a very high probability we can continue moving bullish. And I think that's going to be a pretty good trade to take at that point. Or if we can kind of like break below this low right over here, then I think we can continue moving down to fill this wick here to the left hand side. So this is going to be like, so now we have buys planned above, what's this price? 1977. And we have sells planned below 1973. Yeah, below 1973 to come down to fill this wick. Right, so we're going to put our zone right over here as well on the 1 hour time frame. We're going to switch over to the 30-minute and perfect. Looks good. Looks perfect. Let's see where we move. Do we break the high or do we break the low to continue down? It's also a Friday, so we're going to be very, very careful here. Let's take a look at the news. We have any news? We have no news coming in. We have CAD news, some USD news, and basically that's it. First 30-minute candle has closed. We're closing right here. Let's measure how big this range is. This is like a 35 pip range. Yeah, I think we can take a sell over here, right? We can take a sell here because if this is a 35 pip range, let's take a look at this in more detail here. Since it's a Friday, yeah, I think if we can break below this area, there's a very high possibility we can continue moving down from this point. It's like a 34, 28 pip range. Yeah, we'll see if we can break below that area or not. At first, we need candle to make a top wick and then break the low. Because if we can break the low at this point, I think that's going to be a very good opportunity for price to continue down. Continue down. All right. We need to break the low and then we shall see if we can continue bearish. Because we got this clean candle to the left hand side, and I think that would make much more sense. It's going to be a little risky though, so that's why we're going to use a little bit of a lower risk over here. Kind of protect our gains for the week 7.39. So we're going to lower the risk to 0.1 instead of 0.25. We're breaking the low right here. So I think we can, yeah, so stop is going to be above the previous candle. So we're going to take a sell. Stop is going to be right over here. And yeah, that's it. Perfect. Let's take a look on the 1 hour time frame. 1 hour time frame looks good. We're breaking below the low. Looking at the 30-minute time frame, looks good. Perfect. We're in it to win it. The only thing we gotta look out for is the 15-minute time frame, because if the 15-minute candle closes back in the range, then we gotta kind of like, manage our risk there. So far looks good. Oh, wow. Oh. Candle's about to close. There we go. Candle has closed bearish. Let's take a look on the 1 hour candle. 1 hour candle has also closed bearish. Looking on the 30-minute, 30-minute is bearish. Looking at 15-minute, 15-minute is whatever. I think 15-minute closed bearish, so we're gonna close maybe 30% right here, minimize risk a little bit, and let the rest run. Can we add another position once we break the low? Oh, no way. Got stopped out. Oh. Yeah, we didn't break the low here. We didn't break the high here either. And yeah, if we break the low on the 1 hour time frame, we can add another, we can basically give our trade a second chance. Yeah, if we break the low, we can give our trade a second chance, 100%. So we're going to wait for that. Slowly looking at 15-minute, we're coming down. I think it's going to be better to take the trade once we break the low on the 15-minute, which is also going to be the 30-minute, 1973.26. 1 hour time frame, 1973, yeah, 26 makes sense. There we go. We've broken the low right here, and this is where we're going to take this sell. Stop is going to be above this area, and we're expecting it to continue bearish. We're going to secure positions at around 10, 15 pips, and yeah, basically that's going to be our last trade. So this is where we got stopped out, and now we're giving a trade a second chance. If we didn't get stopped out, this would have been a perfect opportunity to add another position to the trade. Right, this is going to be a picture perfect opportunity to add another position to the trade, but sadly, like, you know, we got stopped out, so it is what it is. So we gotta kind of like deal with that now. Kind of struggling right here, not looking good. The candle is about to close here as well. Are we going to continue moving? Are we going to just hang around in there, or will the volume come in? Oh, there we go. Volume is coming in right now. We're about 4 pips, 2 pips. Oh, look at that. Candle closed bearish. Can this continue moving down around, 10 pips right here? Since this is a smaller range, may want to secure majority of the positions at this time. Close 90%. It's a smaller range here as well. Put stops at break even. Got to be safe, right? It's a Friday. Oh, wow, look at that. Straight rejection from that point. This is where magic keys work really well. You reach 10 pips, you press it, boom, secure. Secure positions. All right, so we're moving further down now. Okay, whatever. The candle is about to close over here as well in about 20 simulation minutes. So see, we had clean candles to the left-hand side, and price did exactly what we expected it to do. You know, if we didn't get stopped out, obviously we would have entered another position right here once we broke the low. But since we got stopped out, we gave our trade a second chance. Always give your trade a second chance, right? The one thing is never change bias. If you have a selling bias and if you get stopped out in sells, don't look for buys. You know, look for sells again, because there's a very high chance those sells will come around, and then you'll be able to give your trade a second chance. Give your bias a second chance. You know, if you don't get that second chance and price goes the opposite way, then your analysis was wrong. But if price does go your way, then your analysis was right. And then you got to take a look at that and ask yourself, okay, how could I have given my trade a second chance? You know, that always works. And we can see here, price came down straight to our rejection area here. Let's see how this candle closes. Oh, wow, we closed bullish back in the range. Damn, we're still oh, wow. Dropped nice over here. What caused this drop? 15 minutes straight down. Look at this. Look at this wick over here. Straight volatility. 46, 48 pip move down. Crazy, crazy move over here. And straight right back up. Yeah, gold is wild here. Perfect. Awesome. So, what time is it? It's 10 a.m. right now. Thank you everyone for joining in. We did a whole week. Let's take a look at our account here. So where's our stats, right? So this is our stats right here. So we took 4 trades, I think. Yeah. Our profit was 62, 138. Then we had a stop loss right here, 62, a minus 10, minus 1, you know. So we basically really managed risk here. Looking on the closed trades, you can see the closed trades right here. Drawdown was 5 pips, 5 pips. This is like 16 pip drawdown. This is where we had a smaller lot size. Looking at the statistics, unrealized profits, $218. So totally we did around 7.3%. You know, so far. Can you quickly go over why you drew the rejection area, how you drew it? Was it just from the bottom of the wick and close of the left of the wick? So this rejection area was just at these wicks, because when price was breaking this support, so let me go back over here. Okay, so when price was breaking these supports, right, this was the area we were trying to cover. And then we're looking at, okay, price rejected this area, so you got to ask yourself why. Whenever you're looking at the chart, ask yourself why, right? Always ask why. So if price is coming down, you have clean candles to the left hand side, and price is wicking here, I'm asking the why, and I'm asking why. This means, okay, there's a high probability for price to continue down to this body here, but as it continues bearish, it has a higher probability to reject from this area here as well. It's another thing if it starts breaking it, but the higher probability is that it will reject from this area. And we saw that it did actually reject from that area. So this is why, the zone was drawn at these wicks mostly. When I give the trade a second chance, this need to be with the one with the same risk or with the losing one. That's all up to you. Using risk, that's all up to you, what kind of risk you want to use. That comes with practice, intuition, experience. I normally lower my risk if I give my trade a second chance. But if the second chance is really, really solid, then I use the same risk. All the trades you took were in 5-minute time frame live session, but here you look differently time frame, like based on the 1 hour. Yes. So we took on the 30-minute and the 1 hour for educational purposes. 5-minute is extremely hard. It requires a lot of practice, and I don't want to get into that right now. This was based on simple market structure. That's it. Why is it bigger than the ones above it? How do you determine the top of the zone? Well, this is a ballpark value right here. This is the ballpark zone right here, right? This, I can make it thicker too right here, right? So the average wick size is right here. This can be however big you want, but I like to have it just like right over here. And that comes from posting charts. You got to post charts with your analysis, either send it to me or in the groups, but you got to post charts with your zones drawn, because the more people see your zones drawn, the better interaction you're going to get. And someone's maybe going to say, hey man, like maybe you want to have your zone something like this or something like that, right? So this is where I have my zone right here. But when you're looking for candles to close, you're waiting for candles to close above the bodies of the previous candles. If this candle closes above the body and the next one breaks the high, then there's a high probability we're going to continue moving bullish. But you can see the candle didn't really close above, and we eventually started moving down. So for candle closes, you're looking at candles to close below the bodies, because that's where the candles are basically closing. Is it okay to draw zones according to a line chart? It's up to you. I never look at the line chart to draw zones. I don't. I just look at the candles, and that's all I look at, basically, candles. I used to look at the line charts, but then it just got too messy. It just got too messy. The more conferences you have, the more confused you're going to get, and it's just not too good. It's like when you're about to take a big decision in life, and you ask 10 people, and then you're going to get 10 different opinions, and then you won't be able to execute on your own opinion. So I like to just look at one thing. I sometimes notice you get out of your losing trades early, 100% very small loss, then as opposed to closing out a percentage. Yeah, that comes with experience. Comes with experience where you know that you're gonna kind of like, whether this is a losing trade or not. So you make a decision whether you want to close the whole thing or a little bit of it. Never sent you a chart before. When is it okay to send you a chart? You can send me a chart whenever you want. If so, we can advanced webinar sometime, but you need experience first. 1 more week? No, 1 more week. I'm fasting. I have to do some stuff right now. In which time frame it's better to wait 15-minute or 30-minute for the candle to wick first and go in our direction? Mr. Tariq, we did the question you asked. That exact same thing we did here today. Your entire question is answered right here in this webinar. My 4th week here. Thank you. All right, thank you guys. Really appreciate you guys came in. We'll see you guys Monday morning. Take care and have a great weekend. This was recorded and it's going to be in the database in about 4 or 5 hours. So see you guys. Take care. All right, thank you. Ai, gracias, Brazil.